Welcome everybody to the Profit and Sustainability webinar. This is the first of a 5-part series. Today is an overview. The subsequent 4 will be details about carbon, waste and water, products and certification, and societal sustainability. So what we'll talk about today is just a brief introduction and overview at some of the trends and forces driving increasing sustainability. And then we'll dig in, we'll do a little bit more in depth on those 4 issues and how they're linking to profit for business before we wrap up. So first I'll give you a quick overview. This is Paul Herman of HIP Investor. HIP stands for Human Impact and Profit. And HIP really focuses on the intersection between doing good and making money, and how corporations and other organizations can do so to both boost their human impact while at the same time their bottom line. So the 5 categories of human impact that HIP defines are health and wealth, earth and equality, and trust. So health is about both physical and mental health, wealth about income and assets, earth about carbon and reusable products, equality from a gender, ethnicity, or class basis, and trust in terms of being ethical, credible, and transparent. So when companies solve problems in these areas, either through their products or their operations or their supply chain, they end up increasing their financial performance. So what HIP does, just to complete the overview, is we advise investors on their public and private portfolios. We run the HIP 100 index, which you can see at hipinvestor.com, which is live and available for investment. And the HIP 500 index will be live before the end of the year. We also consult to corporations. We've consulted and advised on Walmart's sustainability index, which they're pioneering and is turning into a consortium, as well as Nike and a new product platform that they're rolling out. And we've been published in Fast Company magazine, as well as other media channels. So I'll hand it over to Tara to tell you about SureGround, and then we'll dig in.
Thanks a lot, Paul. Well, I just wanted to say welcome to everyone as well. SureGround is a sustainability consulting firm, and we're focused really on creating multifaceted solutions that take a holistic and organization-wide approach. We feel that this approach creates an ability to generate ripple effects that go out beyond just your local to the global community. We believe it drives revenue, profit, innovation, helps reduce risk, and at the same time drives social and environmental change. This creates a fantastic multiplier where gain is creating good and good is creating gain. So let's take a look at the first of our 4, well, let's get a quick overview before we jump right into our 4 topics. The 4 topics that we're going to be looking at include cash and carbon, waste and water, procurement, and societal responsibility. But first we're going to take a quick look at the context. I'm sure that if you watch the news at all, you notice that the government impacts are very, very large. I guess big is probably not a big enough word. $61 billion in the American Recovery and Reinvestment Act is related to energy projects. The smart grid that we've all been hearing about is getting $11 billion, and $6 billion in renewable energy. And President Obama is certainly focused on improving the efficiency of the government buildings and vehicles, as also he underscored with his executive order that was out earlier this week. Clean Energy Act that is currently awaiting a decision is also intending to create anywhere between 900,000 and almost 2 million new jobs and increasing household income from about $500 to $1,100 per year, and expected to boost the GDP by 2020 to, I'm sorry, you may not be able to see that number under some of those little icons on there, but it's $111 billion by 2020, according to a recent UC Berkeley study. Consumer pressure is also on. Boston Consulting did a survey of 9,000 consumers, and they find that demand for green products continues to rise despite the economy, rising 6% from 07 to 08. And not only is the demand increasing, but people are still continuing to be willing to pay more for green products. There's clear evidence of this in examples like the organic food market, which has grown 13.7%, reaching a value of $52 billion. And it's still only representing 3 to 4% of the total food market. So there's a gigantic opportunity here for growth in organic foods. Clorox really took an opportunity here as well, saw what some of the other natural cleaning products were doing, and jumped right in January of 08. Since January of '08, they've leaped ahead and are now the #1 brand in natural cleaning, generating $200 million in revenue annually from this line alone, and have captured 42% of the natural cleaners market. So the things that consumers are resonating with most. Most consumers are still thinking about natural projects, sustainable products being things that have recyclable or reusable packaging, or are energy efficient, or are made with organic or natural ingredients. People are particularly sensitive about things that they put on or in their bodies. But they're also becoming more aware of other attributes such as toxicity, greenhouse gas intensity, certification of products, and water use. Those are on the consumer's radar as well. So if you take a look at this and the consumer awareness is increasing, industry really needs to stay ahead of the consumer in order to be able to meet this demand by focusing on the key areas that we'll be discussing in this series of webinars: waste, energy, certification, water, and social responsibility. Here you can see, or hopefully you can see under some of these widgets, I apologize for that, the session number that will focus on each of these areas, and we'll have some more information about that near the end of the session today as well. So now I'm going to turn it back over to Paul to talk to you about investors.
Sure. So building on government taking a big leadership role in sustainability, and consumers, which is things that you and I and each of us can do to shift demand and shift how revenue is generated at companies. In addition, investors are also seeking to do good and make money. So 2 out of 3 individual investors polled, this is out of a survey of 4,000 investors, see doing good as a positive indicator for their portfolio. And 1 in 5 refuses to actually invest in a stock if firms are not doing good. So that's about 19%. Interestingly enough, even though the preference for individual investors is 20% to avoid firms not doing good, the amount of assets under management is just over 11%, or about $2.7 trillion in this field. So there's still the other 90%, which can be deployed to shift how investors connect with companies. Despite that, 85% of CFOs, investors, and CSR leaders that were surveyed by McKinsey late last year do see long-term financial value from environmental initiatives. However, during the crisis, there's a large concern that they don't pay back fast enough, even though many of these environmental initiatives have paybacks of weeks or months, not years. And then finally, there's an existing group of about 200 mutual funds and ETFs that cover social and environmental investing, with more coming soon, possibly even from companies like Goldman Sachs. Now that they're a bank, they're also getting into the consumer mutual fund business. But the challenge is, how will these pay off for investors? So what you see on this slide is a comparison of the HIP 100 index on top over mid-2004 to mid-2009 compared to 3-month treasuries. And for the ones listed here, which include not only socially responsible funds and some environmental funds, but also the Vice Fund, which invests in alcohol, tobacco, and weapons. A more progressive approach that focuses on what is the overall human impact and how that drives profit appears to be stronger than ones of just kicking out negative companies.